All right, good morning, everybody. It is December the 26th. If you're over in the UK, this is called Boxing Day. Don't know why it's called that. Didn't bother to look it up. Yeah, it's the day after Christmas, and the markets are pretty quiet as expected. At this point, if I were to take a trade, it would be in the direction of the bias for sure. No counter trend trades today, not in the low time frame. So we're going to take a quick look. There aren't really any news events today. So we'll just I'll show you how I know that. Take a look at that. And let's see here. Let me go ahead and share the screen. But before I do, here's a QR code. Zap this QR code to take you over to our website. You can see what we do. And we'll, towards the end of this little video, we'll talk more about this. Who we are, what we do, how to find us, all that stuff. But there's QR code, algofactory.tech. We help people learn how to trade, and that is what we do. All right, but let's go straight into the content. Let me go ahead and share the screen. Entire screen, and go. So this is a website that I use for just for looking at what's going on in the news, especially for Forex markets, but not just Forex. It affects every single market. And this has to do with currencies, economic data, things that really kind of have like a holistic effect on what happens in the market. Okay, so let me fix the screen just a little bit, make it a little bigger. And you can see here that all these like folders that you see, those yellow, orange folders, none of those are red. So if they were red, there would be a heavy impact event. And they have some medium events happening, like this orange folder right there tomorrow, the Richmond Manufacturing Index. But I really don't expect those to do much. They rarely do much anyway. It's almost always the red folders. I'll scroll up so you can see what that looks like. Let's see, let's roll back to a prior week. And what I personally do, you see those red folders right there, like for AD and JPY, and as you scroll down, you'll see some for the US, I'm sure. Like there on Wednesday, last Wednesday was the consumer confidence data. When that came out, there was a move in the markets, and that's just how that works, because this is economic data. And so people see that data and they make assumptions about what's going to happen in the future, and then they change their positions. They'll either buy or sell, and it will move the markets, and that's how that goes. Well, given that this is the last week of the year, this is probably just a terrible week to trade unless you are a nut job like myself. I like to find little scalps and stuff like that, or unless you're trading crypto. Crypto still has a lot of action. As a matter of fact, for my group, for my private group, my subs, we actually called that move down in Bitcoin. A couple of, I think it was like a day or two ago, I called it, and then I refined it yesterday, and it pretty much went to plan. It's a little, well, I'll actually show you. I'll show you all on the screen what we said. First of all, if you are watching on YouTube, like, subscribe, notification bell, all that stuff. It does help us out, all right? If you're on Twitter, that's cool too. Go ahead and follow me. That way you can know when these are going on. Flip on the notifications as well. All right. In fact, let me take a quick look at Twitter and see if we do have anybody watching. Let's see here. Okay. Yep. Okay, here we go. Live on X. Yeah, this is pretty cool. I like going live on X, but very quiet. It's like the day after Christmas, so I can't expect to have a bunch of action on a day like this at 8:30 in the morning. But let me go ahead and tell some of my friends on Twitter that I'm live, and maybe we'll start piling some people in there. Let's see here. All right, cool. So as I said before, it's just not going to be a lot of action this week. This is a week where in our private group, some of our people will share their algorithm. We'll go over what they're building, maybe see if we can kind of squeeze a little bit more profit out of it, stuff like that. So, it's more of a study week, really. That's what that's about. So, we'll be treating it as such, but in the meantime, I do need to show off just a little bit. So I'm going to go ahead and bring something up on the screen here. All right, so I called this on, what is this, Christmas Eve? Yeah, Christmas Eve, I called this move. All right. I'm going to expand this so you can see how Bitcoin came down into that hard move down and then came up. And I was predicting that it would fall towards 42,000. Right now, it did take a little bit longer, but I did mention here that in the description of what could happen, I said this could take longer, it could go up a little bit higher, but this is a kind of a basic idea of what I expect. And of course, Christmas being Christmas, the price action was a lot more slow than usual until it wasn't, right? So the thing about crypto and trading, especially crypto, is that these are markets that never close, right? And let me show you the actual chart that goes along with that, by the way. So here is the actual chart, and let me expand it and let me blow it up a little bit. Looks like I did not have that ready. Sorry, folks. Okay. So this is the actual chart. So let me do a quick back and forth comparison. Let's go to a lower time frame for this. All right, and let's expand that. All right, yeah, there we go. So here is the chart that I drew, or that actually happened, right? And then let me bust out the chart that I drew, right? So you see here how it came down and just kind of binky to bink like that, right? Came up, bounced around, came down to 42,000. Well, here's what happened in real life, right? Came up, bounced around, came to 42,000, actually 42,200. So it was just a couple hundred off. Look, here's the thing about trading, right? The whole idea behind trading is if you can predict what happens in the future, then you can make money, right? So if it's just like, imagine you're going to a swap meet, right? And you're buying, and like it's a swap meet where you could buy and sell things, right? So imagine if basically like you go to a table that's selling hammers at the swap meet, right? And there's like hammers for, $15. And for a fact that those hammers are going to be $30 or at least let's just say not for a fact. Let's say you have a pretty good idea that hammers are going to be like $30 in about 2 days. So you buy all the hammers you can buy at $15, and you come back to the swap meet, bust out your own table, and you can sell your hammers and make like double your money. Well, that's basically what trading kind of is. Like, you don't know for sure it's going to be $30 per hammer, right? You don't know for sure, but you have a pretty good idea it's going to be around $30, right? And so that's how this works, right? So, but the cool thing about trading, especially like, crypto, Forex, things like that, you can also sell ahead of time. It's called going short. So you can bet on the price going down and you can bet on the price going up. And I'm not going to get too heavy into like the details, with regard to how that works technically, but just understand that in trading, that's what you do. So what we do at Algo Factory, of course, is that we have a scientific method, and we go back in time and we take a look at the old charts, and we use what are called indicators. All that gobbledygook you see right here on these lines and stuff like that. There's a lot of different kinds of indicators. In fact, let me cross your eyes real quick. All those down there are called indicators, right? One of those is one of mine that I developed and designed. Let me see if I can expand it. I designed this one, and this one is going to be actually made available to the public after not too long. So in fact, we have a series of them that are going to be coming out. One of them is in production right now. One of them, and then two of them are already ready, and I might try to add a fourth, right? So at any rate, and so we use those indicators, and we use just like basic math to figure this out. And it really doesn't take like some kind of crazy degree. Like, you don't have to be a science person or a computer programmer, any of that kind of stuff, right? Like, we help people learn how to trade from a basic standpoint. And then once they understand how to trade, they'll be able to build what's called a trading algorithm, which is just a trading plan. That's all it is. It's nothing fancy. Algo is a word that, it's kind of in the ether. It's a big word in the zeitgeist. Algorithms, and they think it's like magic, but it's nothing. It's just, going to the store is an algorithm. You just, you got to take a left here at this street, take it right there at that street. That's an algo. Nothing scary about it. So it's just a process. That's all it is. It's when certain conditions line up, you take this action. And that's all trading ever has been, right? Anybody who trades successfully, I can all but guarantee you that they're using an algorithm, whether they know it or not, right? Just old school manual trading. Now, what happens with that, with old school manual trading, is that eventually, once you have something that you've kind of proven, you've tested it, you've gone back in time, you know that it works to a certain statistical degree of probability, you've even forward tested, you've run it live for a little while, so you know what it looks like live, you can have that coded. You can pay to have that coded, and it doesn't cost a fortune. It's it isn't free, certainly, but you can pay to have that turned into code. We even have a gentleman inside of our group who does some coding, although I don't think he's coding for anybody in the group yet. But it's coding is not some mystery; it's just another language. But long story short, there are people you can pay to do that. It's not a big deal. That's how this got coded. The one I showed you earlier. This one right here. Let's do this. Yeah, this one was coded by a friend of mine. So. Very doable. And then once it's coded, what the cool thing is, if you want to, you can actually have that connected to your broker and it trades for you. Now, there are some caveats to that. It's not something you're going to just turn on and walk away. You'll be able to walk away for a lot of the day, but there are times when you don't want to run it, right? Right at the end of the day when the market closes and there isn't a lot of liquidity, and those are times when you kind of want to shut that off for the most part. The holidays, Christmas, you don't want to run it, things like that. Because look, the crypto markets, crypto doesn't shut off. Like Forex, that might shut off, but did it shut off yesterday for Christmas? I don't think so, because it was a Monday. Let's see. Forex is international. It runs 24 hours a day, 5 days a week, right? So it doesn't run Saturday and Sunday, but from what I can see here, it ran all through Christmas. Now, it didn't do a whole lot, right? But it was up yesterday, up and running, right? And that's, like I say, it didn't do a lot. Very quiet market yesterday, and it probably will be, I'm assuming, for today. It'll probably be quiet. But it runs. And on a time like this, there's a decent chance that you don't want to run your algorithm, because most traders have and need what is called volatility. You need price to be moving. It needs to be moving significantly for you to make any kind of profit. And if it's not moving, then you're just kind of, it can be tough to trade. There are algorithms that you can develop that are designed for that are designed for low volume times. And that's actually a really good idea if you can develop one. But either way, that is the picture of, that's what we do. That's how we do it. So I'll take a look here at Bitcoin and see if I can do a little forecasting. Let's see here. I don't want to use that one. Well, what's this? Oh, that was the potential trade that I drew out while I was talking last week on a show. So that trade would be well in a profit, but this actually was a higher time frame trade that I drew, because Bitcoin had created a. Let me show you something. This was during a show, and I think it might have been live on X too, if I'm not mistaken. But basically, Bitcoin had created this range, and I drew a box around that range. And if something's in a range, I tend to not bet on it going outside of the range. I'm going to bet on it staying in that range and heading to the other side of that range. And sure enough, that's what it started to do. So I drew this trade during our show, and it would be well more than a 1-to-1 right now. So risking, let's just say $1,000, I'd probably be about $1,100-$1,200 in profit, and at one point closer to 15, maybe even more. So this great trade, drew it out in front of everybody. That was on, gosh, man, what is today? Tuesday? I think I did that on Saturday or Friday. So that was like a free one. I gave that out to everybody. This was on X too, not just YouTube. So, there it is right there. I mean, very simple stuff. But let's take a deeper look. Let me erase this trade. And I'm gonna cross everybody's eyes just for a minute. Don't let the all that gobbledygook bother you too much. That's just the way I look. Look, I can tell you right now, Bitcoin is bearish. Yeah, I would guess that what we see right now is one of two things. We might see a bit of a retracement, just a bit, as you're starting to see right now. See price headed down pretty hard, right? If I were to ignore the liquidity charts and just look at price action, right, I would be looking at using this Fibonacci tool, looking at the 618 as a guide. That's usually where price likes to go. I'll mark out the 786, and price may go there. And then I'm going to use my fixed range tool, and I'm going to measure the impulse. All right, so aside from where price is right now, there's not a whole lot of like liquidity in the recent move. There is up by the 786, right? But outside of that, there's not. Now, if we go back a little bit, we can see that there is a fair amount of volume right here. And this does coincide with the 618. But as of the recent move, there's not a lot of volume nodes for price to want to go to. And just so you understand that these where these bars kind of stick out, that's where price is going to want to go, right? It doesn't always make it there. The chart has to favor a move in that direction. But so far, one of these two areas is where price could go. It doesn't mean it will. There does need to be enough force in that direction. And it's what might be happening is that, look, if price doesn't retrace that far, it literally could just like keep going down. That's possible. It's very possible that it could continue down even from like right where it is right now. Let's see. Let's bring out all the gobbledygook. In order for it to continue down, there would have to be a fair amount of force. I could tell you it's bearish enough to do it, right? It is bearish enough to do it, but I wouldn't go short just yet. I'd be looking at my algo to tell me I could go short, because it's like the price action that we could see right now is that price wants to go short, but it might still need to retrace a bit. So it might fool some people into going short, right? It might kind of fool some people and then grab, some of this liquidity up here and then go down. That can happen. That's one option. But another option is simply for price to just go down. Could happen. It's very possible. But another tool that we can use would be looking at the liquidity nodes, and this is over at kingfisher.io. And if you're watching this, I'll have a referral link in the description if you're on YouTube. And let me grab a liquidity map. There's a lot of liquidity. There's a lot of Bitcoin liquidity sitting up higher at 43,000 and a whole bunch of it at 43.8, but this node starts at 43.5. So 43.5 to 44 is where price may want to go, right? And we'll explain what that means in a minute, but we'll just draw out the boxes. So we said 43.5 to 44. Okay. So 43.5 to 44. So all the way up here, there, and that makes sense. That makes sense that there is liquidity up here because of all this price action back here. So, we might see Bitcoin grab that liquidity before it goes down. Very possible. Even though price seems to want to continue down, a lot of people have gone short. And the reason that those liquidity nodes are there in this area is because people's stop losses are there, or their liquidations really, where people in the derivatives market have gone short. And if price goes up to here, their trades get liquidated. And people who have higher leverage, they tend to know this, although they oftentimes don't. And their stop losses will be in that area too. So it'll be the same kind of thing. Now here on the downside, these are liquidity nodes that are close by. It's a good chance price will go there. There's one good one, right? Like 42,000. And then there's a fair amount down at like say 41.5. And I know I had there were more at about 41.3, but those are gone now. So these liquidity nodes right here, these purple ones, are where people have gone long, right? So that means like people have bet on the price going up, and their liquidations and stop losses are down in this kind of 41.5 area. So it really starts at 42, and you have a block of them at around 42, and you have a block of them around 41.5. So we'll say 42 right here, right, kind of surrounding that. And then down at 41.5, like here. So just where I drew that arrow, and that would make sense because if we're measuring the Fibonacci extension coming down from this main impulse, which this is the impulse, right? The impulse is the big move. So this big move is called an impulse. And the Fibonacci extension to that impulse is the 272 is right below this node, and the 618 is right below this node. So these two lower targets are decent targets for Bitcoin, 42K, 41.5 right now. But there's always that chance that, especially in these slow times between Christmas and New Year's, that Bitcoin grabs this liquidity before it goes down. It's very possible. Doesn't mean it's going to happen. Doesn't mean it won't. I mean, it's just, the two things they're the two most likely scenarios right there. Straight down to those, or grab liquidity and then down, or anything in between. There's a fair amount of liquidity right here just from old trades around 618. So this doesn't necessarily mean that it's on the map. It's not necessarily on the liquidity profile, but it is where people traded before. So it actually exists in the ether, if you want to use that term. So anyway, I know it was a pretty technical kind of morning, especially for the beginner, beginner live lab. But I do want to invite you all to come over once more to www.algofactory.tech. There you go. There's the QR code. You can zap that to come find us. Also understand that at $49.99, that price is really, 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 really underpriced. Like, we're probably going to go double or quadruple that coming up next year, because we are actually going to have a pretty big marketing campaign. And once we have enough people in, we are going to go ahead and raise the price. Here's the thing. If you get in at that price, we are not going to raise it for you. As long as you keep that membership going, as long as you're in at $49.99, and you keep your membership alive, it doesn't your membership doesn't like lapse, then we will go ahead and not raise that price on you. You get grandfathered in at that rate. And our service is top notch. There's nobody doing what we do. There's nobody doing anything like what we do. We are amazing. And by the way, there's been a ton of winning trades. Like, a lot of people are in there just winning trades. I put my trades up and my trades win. And I put my trades up before I enter them, so there you go. All right, everybody. We hope to see you in there. Going to jump off of X, jump off of YouTube. We're going to go over to our private members, and